of the Bridge Better Resources for Inclusion, Dialogue, Growth, and Equity, a program that we have here at the South Carolina Small Business Development Centers. My name is Rebecca Blackburn-Hines. I am a special grants program manager with the SBDC in our state director's office. And today we have a presentation for you, a webinar training. It is called How to Obtain Financing, Important Advice from the Experts. And we have two highly qualified experts on this training. We have Grace Butler, who is with the Climb Fund. She's the lead community development officer. And we also have Paul Featheringill. He is a South Carolina SBDC region director for the USC region. And they are presenting this webinar this afternoon. Just a little bit about the Bridge. The Bridge program is a collaboration that we have with the South Carolina Commission on Minority Affairs, our South Carolina HBCUs, lenders, and other partners to improve upon the economic impact of African American-owned businesses and entrepreneurs in South Carolina. Our Bridge program has several different components. So we offer customized one-to-one, no fee business consulting for your small business. We also have a virtual student center with students from the HBCUs in South Carolina participating in that program. We also have a podcast, and our podcast can be found on our website at scsbdc.com/bridge. And we offer special educational programs like the one that you are attending today. You can learn more about the Bridge program on our website. And if you have any questions, you can reach out to me directly, and I would be happy to share some more information. So now that we have that opening blurb out, I am going to introduce to you Mr. Paul Featheringill, our region director for USC's region, and he is going to get started with the nuts and bolts of understanding business financing. So Paul, I will turn it over to you.
Good morning. Well, thank you, Rebecca, and thank you for this opportunity. I appreciate being here. And just to tell you a little bit more about myself, for everyone that's on the call, I have been the region director with the USC region of the SBDC for 2 years. And prior to that, actually, I worked at the Climb Fund, who you will be hearing from a little bit later, as a small business lender. And so my background is in small business lending, primarily in the CDFI space. Which we'll talk a little bit more about what that is and how that works when we turn it over to Climb Fund in a little bit. But needless to say, no matter what kind of business you're in, no matter how long you've been in business, financing is going to become an issue for you at some point. Whether you are at the startup phase trying to find capital to get your business off the ground, or whether you are in business and you are looking to expand into new products, expand into new markets, add employees, do anything like that, or as we've learned recently, if we have situations like a pandemic or even an event like a hurricane or some other natural disaster, you're going to have for your business a need for financing at some point. And keeping your business properly capitalized is something that is one of the most crucial things that you're going to have to deal with as a business owner. So what are some options that you have to find financing to help you get your business going? And where can you go to look at that? So here's some basic options that you have. There's always personal funds, any money that you have saved up yourself. Individual investors, those would be people who would opt to make investments in your business. And we'll talk more specifically about all of these. Grants, there's always conventional bank financing. There's a number of different online lenders out there. You've probably seen things from, Cabbage and Lending Club and a number of different things that are online lenders. They advertise pretty heavily for business lending, crowdfunding, and then some different non-bank financing options, which are things like your community development finance institutions like Climb Fund, that you'll be learning a little bit more about later in the presentation. So the first option is personal funds. Now, pretty much when you're going for business financing, you are going to need to have a minimum of 10 to 20% equity investment for your borrowing. When you're a startup business, it's generally going to be a little bit more than that. If you're just getting started in business, a lot of times they're going to want to see up to 30% that you have funding to put into your business. Now, you can get this funding from pretty much any of these other kind of options, funding options that we're going to talk about. But the point is here is that lenders are not going to want to go all in on your business. They're not going to want to be the only ones with skin in the game. They're going to want you to have a little bit of risk as well, which means that they're going to want you to have pulled together or saved up some of your own capital to put in. A lot of times for people that'll come from savings. Sometimes people will pull it out of your home equity. I was talking to a client actually first thing this morning who was talking about trying to do a home equity loan to get equity to put into their business. Some people look at pulling out of retirement. One of the things that I would say about that is there are some challenges sometimes involved with that. So you might want to be careful with that and at least know what you're doing in terms of the fact that you're going to pay a penalty for early withdrawal and you're going to pay taxes on that money. So it can be pretty expensive. I mean, in general, let's say you need $20,000 towards your business, you're probably going to want to pull out at least 40 if you're going to pull it out of retirement to make sure that after all of your taxes and penalties and interest and everything else that you have as much as you need. So it can be an expensive option. So it's just something that you need to be aware of going into that. One of the things that you'll hear me say in relation to that and in relation to a number of other things that we talk about today that you'll hear me say over and over again is make sure you read the fine print. And what I mean by that is that, any financial option that you look at for your business is going to have its positives and its negatives depending on the situation. And so you want to make sure that you're really aware of what you're getting into. And that's where organizations like us, the Small Business Development Center, that's where we can really help you, is if you work with us to help you understand, what some of the pros and cons of all those funding options are and what the best ones might be for you, depending on the place that you're in your business. But regardless, if you're looking to get funding, especially if you're a startup or you're relatively new in business. And when I say startup, generally what I mean by that is I'm talking about a business that's been in business for 2 years or less. That's generally kind of the point at which you can start to then be competitive for things like bank financing. But if you're in that earlier phase, if you either haven't started at all yet, or you're in that first 2 years, that earlier phase, you're considered a startup. At that point, you're going to have some equity to put into your business. And so generally what I tell people when they're looking to start a business is a couple of things you need to do to really help yourself get ready. But one of the first ones is to start saving some money if you haven't done that already. Individual investors can be another one. Generally, the first place people are going to start is family and friends. And what I would encourage people to do, if you're going to work with your family and friends on getting money to put in, is get something in writing, some kind of agreement about how, what the terms of that are. Because, for example, if you think it's a gift and they think it's a loan, you don't want it to be awkward at Thanksgiving when, somebody's not really, they were expecting to get paid back and they didn't, or maybe they were expecting to get some interest or something like that. Just, whatever it is that you do with family and friends, make it official as to what the terms of that are going to be. Depending on the kind of business you have, there are venture capitalists out there, different venture capital groups who are looking to invest in startup companies. A lot of times you'll see that more on the tech side of things and different things like that. More so for the kinds of businesses that we work with a lot, and I know with Climb Fund, the kind that you guys work with, angel investors can sometimes be a better option. There are different angel investor groups out there, and basically the way that works is it works kind of like Shark Tank, if you've ever seen that show on TV, where you'll go and you'll pitch your business idea to a group of people who have capital to invest in businesses, and they'll decide whether or not they want to make an investment. Again, this is going to be another instance where I'm going to say, make sure that you ask questions and make sure that you read the fine print. With those angel investors, a lot of times they'll want to take some kind of stake in your business. There will either be a debt component of it where they'll want you to repay a portion of it, or more commonly, what's going to happen is they'll take an equity stake in your business, which means that they're going to have an ownership percentage in your business, and you want to be careful with that. I know that I was working with a client recently who over the years, and he had a really great business. Over the years, he had done so much of equity investment that he only owned 20% of his business. The other 80% was tied up of it with different equity investors, which gets really complicated when you go to trying to borrow money, because you have to try to untangle that ownership structure and that sort of thing. So you just want to be careful about that, about understanding. Sometimes it'll make sense to do that, but you just want to make sure you're careful about that. You don't want to give away so much of your business that you're no longer the majority owner. So just something to think about. So grants, we get questions a lot about grants that are out there for businesses. Grace, I'm sure you do too. This is something that we hear quite a bit. There are not a ton of grants generally for starting or expanding businesses. Now we have seen since the pandemic, we've seen some more things that have been available than what used to be, just to help businesses get back on their feet. I know, for example, there's something called a Barstool grant for bars and restaurants to help them kind of recover from the pandemic, that it looks like is going to be an ongoing thing. There's some different things like that that have been out there. There's a website offered to the federal government called grants.gov, where you can go to look to see what's available for you. Generally, what we tell people, because as the SBDC, we can help you to find potential appropriate financing options for you. We can help you apply for those financing. We work extensively with organizations like Climb Fund on putting together business plans, projections, different things like that you're going to need as part of your loan package. And we'll talk about that more later. Generally, what we tell people is we don't have a list of grants per se. If we hear about something that's available, we will let people know. But if you find something that you think might be appropriate for your business and something that you might be competitive for, by all means, we can help you with that process of getting the application together. There are a couple of things that we are aware of that are out there. SBA offers grants for scientific research and development. There's something called the Small Business Innovation and Research and Small Business Technology Transfer. Those are really if you're more on the scientific or technical side, and you're looking at funding to help you develop that and take that to market. There are also through USDA some rural business development grants. If you are in a rural area, you're looking to do something agricultural, there might be something there that would apply. So, you know, as we know of things that might apply to your business, we can certainly make you aware of those, but we don't keep a running list of those things per se. And then conventional bank financing, where the challenge comes in a lot of times with conventional bank financing is it's going to depend on your time in business. Typically, a traditional bank is not going to be interested in doing financing until you've been in business for 2 to 3 years generally. And then they're going to look at, are you profitable? And they're going to look at different things like that. Your personal and business credit can also be a factor. Typically, what we say with banks is that you're probably going to want to have at least 680 to 700 for personal credit, or more, to really be competitive. You're also going to want to look at starting to establish business credit early on in the life of your business to be a factor in that. And we can talk a little bit more about that going forward as well. Loan amount can be another factor. You know, a lot of times for your business, I mean, I was talking to somebody yesterday and he needs $30,000, you know, so a lot of times it's a smaller loan amount that businesses need to really get to where they need to get. Banks really aren't going to get interested until you start getting into those larger loan amounts, the 350, 400, $500,000 and up. There are some SBA programs out there that you may have heard of. There's something called the 504 program for real estate purchase and investment and development. And then there's a 7A program that can be used for working capital financing, equipment financing, and this sort of thing. These are things where if you think this is something you might qualify for, typically these are going to be 350,000 and up. And although I learned yesterday that there is an SBA lender out there who can do smaller ones of 125 and up. So generally they're going to be 350 and up. They can go for businesses that are newer in business or startups, but that's something that if you think you might qualify for that, we can help you with that as well. But the big thing with conventional bank financing is going to be your time in business and your credit. I would suggest to all of you though, if you're newer in business and even if you're not at the point where you're able to get bank financing, start developing that relationship with your bank from day one, so that when you do get to that point, you have that relationship, and then you can really work with them on things like lines of credit, which I recommend all businesses have, and then potential other lending to help you with your business. So number one, when you're starting out your business, you want to make sure you set up a separate business bank account. That's number one. You'll want to talk to us or somebody else because you really want to try to find a bank that's, maybe a smaller bank or a more local bank or somebody that's a little bit more business friendly than some of your bigger banks sometimes are. And you want to work with them on establishing that relationship so that when you do get to the point that you've been in business for a long enough period of time to be competitive for financing, that you can go to them and that they will be a good option for you. Online lenders. So this is another option. You're going to see a lot of these advertising themselves frequently. These are some of the ones that you'll see more commonly. There's On Deck, there's Cabbage, Lending Club, Prosper, Square Capital, some different things like that. These, they have their advantages, and one of the things that we say, and I learned this when I was working back at Climb Fund, we used to say that, and I borrowed and stolen it since then, and I still use it, which is that the more advantageous money is in terms of the better the interest rate is and the better the term is, the more difficult it's going to be to get and the longer it's going to take you to get. So in other words, your best options for that are generally going to be traditional bank loans. They're going to give you the longest terms at the lower interest rates. They're also going to be, they're going to have the most requirements as far as time in business and things you have to have, and how long the process is going to take. On the other end of that spectrum are these guys, the online lenders. And what they can do is they can get you money very quickly. You can fill out the application online, you can submit it, you can submit your application, you can a lot of times get a decision and get the money deposited directly into your bank account within 24 to 48 hours. The downside to that is it's going to cost you. They typically have higher interest and fees and shorter terms. And one of the things that you want to be careful of when you look at all kinds of business lending, but especially these guys, is it's not just your interest rate that's a factor in this. It's all of the other fees and costs that are associated with borrowing that money, because you're going to have things like origination fees and annual fees and things like that that are going to go on to your interest rate that are typically going to really raise the cost of that money. The other thing that you're going to find with these is that a lot of times, rather than making a monthly payment like you would traditionally with a car loan or a real estate mortgage or something like that, a lot of times with these guys, you're going to pay them daily or weekly. And it's going to come directly out of your bank account, and it's going to be very, very expensive. I was working with a guy, I'm still actually working with a company that has several of these, and they're paying $1,200 a day. Directly out of their bank account to some of these different lenders. So those are the kinds of things that you want to be cautious about. Fully understand that businesses can get into situations where you got to make payroll, you got to buy some inventory, you got to pay the rent, you got to keep the lights on. And sometimes, these can be options for you, but I would just encourage you to be cautious with what you sign up for with these. Crowdfunding can be another option. These are a few examples that you'll find out there for crowdfunding. You've probably heard of things like Kickstarter and GoFundMe. This is a case where you can go out there and you can put a pitch for your business online on one of these websites, and people can donate money to you. It's not money you have to to pay back, you're going to want to find out from the particular site, the particular platform you use, what their fees and their fee structure is. Sometimes they're going to want to keep some of that money to pay for the cost of their site. So you're going to want to find that out. But this can be an option, and especially as you're looking to raise that 10, 20, 30% that you need to have to put into your business. This can be an option to do that. And a lot of times what businesses will do is they will offer an incentive for people to donate to them. And that might be, if you donate to me, I'll send you a t-shirt. I'll give you 10% off for the first month that you shop with us. Something like that, to give you an incentive to give money. But this can be an option for people as well. You hear about some of these in terms of, people raising money for, medical bills and different things like that. But, some of these can also be options for raising money for your business. There's a few different non-bank financing options. I mentioned SBA loan programs, the 504 and 7A. That can be one. CDFIs, which Grace is going to talk to you here in a bit about that. Community Development Finance Institutions and Community Development Corporations. Those are organizations that are really set up and designed and intended to work with small business owners that have struggles with access to capital through other of the more traditional means. Venture capital, I mentioned. Invoice factoring is one that you'll hear sometimes. This is one where you can get financing based on getting contracts, making sales, and I would encourage you with this. It can be an option for you, but it can also be very expensive. So make sure that you understand what the interest, what the fees, what the terms are. Merchant cash advances can be another one. So the way this is going to work is that when you set up your business, if you're going to take credit card sales, you'll sign up with a company to process your credit card fees, and then what they will do is they'll offer you working capital advances, and what they'll do is then they'll take a percentage of your sales through your credit card transactions. But again, that can get very expensive in terms of interest and fees, so you want to watch that, but that can be an option. And then seller financing, if you're looking to purchase a vehicle or you're looking to purchase equipment or something like that, don't forget that sometimes, dealer financing or seller financing can be an option for you, to where you can try to get capital for it that way. So what are just some general things you should know based on what we've already said? There's no such thing as 100% financing. Okay, so in other words, any financing you go to get, there's going to be some capital, some equity that you're going to have to put in. Now, one of the cool things is if you go to an organization like Climb Fund, they can account you've already invested into your business as far as your investment into your loan, because more than likely by the time you go to get business financing, you're going to have put a fair amount of your own capital into the business, and so they can account for that. So I would also say in relation to that, make sure that you keep track of all that as you're going along. So if you're starting up a business and you're buying equipment and you're buying inventory and you're buying supplies and you're buying all those things, keep track of all that so that then when you go to get financing, you can show I've already put this capital into my business. Personal credit history is important. If you go the traditional bank route, as I said, you're going to have 680 to 700 at least. If you're going to go with a CDFI or something like that, they're typically going to want to see 620, 600 to 620. Although, there's sometimes ways to work with that. But what I would say is if you're going to borrow money, and whether it's business financing, whether it's to buy a car, whether it's to buy a house, know what's on your credit report. If you haven't looked at it in a while, pull it and take a look at it, because there can be some things on there that shouldn't be there. There could be some things on there that you didn't know about. There are things that you can try to fix. There are things that you can try to get addressed before you go to borrow money. Some kind of collateral is going to be required. You're going to have to put up some kind of security for the loan. Sometimes it can be a personal guarantee. Sometimes it'll be business assets. Sometimes it might be real estate. There's a number of different ways that could be options. But if you have any of those things, just understand that you're going to have something to offer as collateral or security for the loan. I mentioned personal guarantees can be an option. A lot of loans are going to require you to sign personal guarantees in addition to other collateral. And what that is personal guarantee says, if I'm not able to repay this loan out of my business, I pledge my personal assets to repay this loan. And so, be prepared to do that. And one of the things you might want to think about is there someone who can guarantee this loan outside of the business? It could be a friend or family member, it could be somebody else. That's an option as well. But just the personal guarantee is probably going to be required. Collateral is going to be required. Your personal credit history is important. And one of the things that we can help you with, and that I know Climb Fund and other lenders can as well, think about building your business credit as well. Think about starting on that from the beginning with your business so that you'll have that in addition to your personal. Because if you don't have business credit, then you're still solely relying on your personal credit to borrow money. So, that's something that you're going to want to think about going along as well. So what kinds of things are you going to need for a loan application? You are going to need a business plan. You're typically going to need 3 years of projections. Your personal financial statement. You're going to need personal credit history, a resume, tax documents, profit and loss balance sheet, cash flow, and generally, if you've been in business, 3 years of business financial history. So I'll talk a little bit more specifically about all of bank statements, loan documents for other existing loans you have, a list of collateral that you can offer for your loan, any business organizational documents, and insurance. So let's talk about the business plan. This is one of the most important things that you're going to do as a business. I encourage you, whether you need financing or not, to work on doing a business plan. If you're just in the process of getting it started, definitely do it then. Even if you've been in business for a while, I think this is still a good exercise to go through, and it's something we certainly can help you with. What it really does is it helps you define what your business is. What are your goals? What are your components of it? How is it going to work? What kind of resources do I need? How do I allocate those? How do I handle unforeseen issues? And how do I make decisions? It really is a roadmap for your business to really help you figure out, how do I allocate resources and how do I make decisions and how do I grow this business? Because the reality is you are in business to grow that business. You are in business to make money, to grow that business, and to help it grow stronger. And if you're not doing that, you need to figure out what the issues are that can help you get to that point where you are doing that. You want it to be a profitable business, because if you don't at some point get to where it's profitable, it's a very expensive hobby and you don't want to stay in that situation. So your business plan can really help you do that. It can be a very intimidating process at first, because what'll happen is, if you come to us or you go to a lender, we'll send you a template and we'll say, these are the kinds of things that you need to have for your business plan. And you'll look at it and you'll say, I don't even know what some of this stuff is. But the beautiful thing about working with us, with SBDC, is we can sit down with you and we can go through each part of that and we can help you put together what needs to be in there. You're really going to answer some fundamental questions. What is your business and why do people need it? That's one of the most important fundamental questions you're going to have to answer is, what is it about my business? What am I offering? What am I selling that people are going to need? And why do they need it? And what differentiates me from my competition? Why is somebody going to buy this from me and not from somebody else? It explains your business model. What kinds of products and services am I going to sell? And how do I get this business to grow? What are my qualifications? If I'm saying I want to start this business, why do I want to start this business? And what background and experience do I have to help the lender understand that this business is likely to be successful? That's one of the other things that you really want to think about when you're first getting started in a business. Understand what's your reason, what's your why do you want to start this business? What is it that drew you to this? That's question number one. Question number two is, what's your experience in that area? What's your experience in that industry that helps us know that you can be successful at that? And if you yourself haven't personally worked in that field or worked in that area or had that kind of business, Are you working with somebody? Do you have partners? Do you have employees? Do you have others that you can bring into it who do have that experience, who can be successful? I mentioned earlier that one of the things that we tell people pretty often is, if you are thinking about getting into business, start saving up some money, pull your credit, make sure you know what's on your credit report. Those are things that you can do early on to to really help yourself get prepared to go into this business. One of the other things that I suggest is, if you don't have a lot of experience in the kind of business you're looking to go into, maybe go get a job with one and spend a little bit of time, kind of getting to know that business. Observe some other businesses. Think about bringing in a partner who's worked in that kind of business. Those are things that are really important to helping us understand and to helping you be successful. One of the other things you want to look at is, who are some people that you can work with, advisors that can help you. We at SBDC can be that. Your lender can be that. You can get a CPA or a bookkeeper that can help you on the financial side of things, an attorney to help you make sure that you've really set up the business properly from a legal standpoint. Those are all kinds of things that you want to think about. Who are those people going to be when you're getting your business started, because they can be very important to you. And then you're going to want to understand your market and competition. Pretty much most of the time, any business that somebody has that they're looking to go into, there's somebody out there who already does it or who does something similar. And so then the question becomes, what's your niche? What's your edge? What's your advantage? What's the thing about your business that's going to have people want to buy it from you rather than somebody else? A number of things. That could be there's a unique product or service that you offer that somebody else doesn't offer. It could be a location, right? You could say, I'm opening a restaurant in a part of town where there are no other restaurants. There's any number of things that can be sort of differentiators to your business that will have people there's your product and service as opposed to somebody else. But you have to understand that, and you have to understand who your competition is, and to be able to explain what it is that makes you different and will get their product from you and not from somebody else. And then there's something called a SWOT analysis, which is strengths, weaknesses, opportunities, and threats, which we can sit down with you and help you go through. And that really is something that you're going to want to do as part of your business plan, just to really help you understand the market and the environment in which you're in, and what your strengths are, what your opportunities are, and what your potential threats are to your business, just so you know that going in. Part of this process is to understand, okay, I need capital to understand, or I need capital to start my business. Well, how much capital do you need? And I can tell you that over my years as a lender in this business, I probably sat down across the desk from literally thousands of people who have said to me, well, how much money can I get? And that is not the right answer to that question. You need to tell me how much you need to really make this business successful. And we can help you go through that and understand what you need. And what's interesting about it is, and I've had this experience a number of times over the years, is that people generally are pretty averse to borrowing money. They don't want to borrow any more than they have to, and I totally understand that. But there have been a number of occasions where I've had to sit down with people and say, this is not enough money. You need to borrow more money to really make this be successful. Because, if your operating expenses your first month in business are $20,000, you're probably going to need more than $10,000 to get started. Those are the kinds of conversations that we have to have. But to get to that point, we have to understand what your funding needs are and why you need them. And then I mentioned projections, I mentioned cash flow, I mentioned all these things, this financial plan that you're going to take to a lender to help you get financing to your business. And I'll go more specifically through these to explain how they work. So you've decided what kind of business you want to have. You've come and you've talked to us at SBDC. You have a business plan. You've put in an application with Grace at Loan Fund or at Climb Fund to get this loan money. So what are some deciding factors that the lender is going to look at to decide whether or not to give you money? There's typically 5 of them. These are some pretty standard things that lenders look at, but they look at them in different ways depending on the kind of lender that they are and the kind of business that you have in terms of how long you've been in business, the type of business, and that sort of thing. So we'll go through some of these things. When we talk about character, you'll often hear that. Basically what that is your credit history and your qualifications. Your personal credit history and your business credit history. When you are first starting out, your personal credit history is your business credit. So that's what everybody's going to pull and they're going to look at. And the reality is lenders are going to look at it and say, if you have a number of credit issues, you're going to have to explain why those have been, and you're going to have to get them taken care of, because your personal credit history is an indication of, typically for a lender, your personal credit history is an indication of what your business credit is going to look like as well. Which is not to say, we know a lot of times there's things that happen to people like illness and divorce and unemployment and different things like that. So you have to be able to work through those things and explain them, and that can be a factor in determining whether or not you'll get a business loan. But still, your credit history is important, and if you have issues there, that's something that you're going to want to take care of before you go to get a loan. Qualifications is another one. If somebody comes in and they sit down and they say, I want to start a restaurant, you say, okay, tell me about your experience owning a restaurant or working in a restaurant or anything like that, and you've never done any of that, that's going to be an issue. You want to have a situation where either you have background and experience in the industry you're looking to get into, or you have people that are members of your team that are that have that background and experience. For example, I'll give you an example. When I first started at Climb Fund, one of the businesses that I worked with was a candy and ice cream store in Somerville. And when she was first getting started, she didn't have any experience in that business really much at all, but she had worked for one in another state, and she knew that that was something that she wanted to start when she moved to South Carolina. And so what she did was she identified a business in another state that was exactly what she wanted to do. She reached out to the lady, she talked to her, she kind of brought her on as a mentor, not as an owner or anything, but as a mentor to help her do that business plan and get that kind of knowledge to help her understand how to start this business. And then she went and worked for her for a while to really kind of understand the ins and outs of that business. So that's the kind of thing that can really help give you that background and those qualifications to be successful. As far as personal financial history, personal credit history, one of the things that you're going to want to have is a personal financial statement. And what this helps the lender to see is, what are my assets? What are my liabilities? This is for your personal credit. And there's a couple of things as a lender you're looking at on here. One is, do I have any cash in the bank? Do I have any cash on hand that I can put into this business? You can see for this example that this person has some cash on hand and in the bank and savings and retirement that can go into the business. You're also looking at things like, do you have any real estate? Do you have any cars? Do you have anything like that that can potentially be used as collateral? Another thing that lenders are looking at on this is they're looking to see what your personal debt is. Okay, because if you're going to take on more debt for the business, but you also have a lot of personal debt, that can be an issue because, are you going to be able to pay yourself out of the business every month? If you can't, then how are you going to manage your personal debt as well? So you're also looking to see, what kind of credit card debt do you have? What kind of student loan debt do you have? Those are all things that are factors in how successful you're going to be in getting a loan. This is something that the personal financial statement form, you've probably done this if you've ever applied for a real estate mortgage or even a vehicle loan or anything like that. You've probably done this. If you haven't, it can be a little bit tricky. So if you want to come to us, we'd be happy to sit down with you and help you do this. The trick to this really, or what this is really getting at, is to find out what your net worth is and then what assets and liabilities you have. Your assets are all the things that you have, like cash, retirement, real estate, cars, all these things that have value that you have. All the things that you own, whether you're still paying on them or not. Your liabilities is the amount that you owe. Those are your credit cards, your real estate mortgage, your car notes, your student loans. Those are all the things that you owe. And so your net worth is is what you owe in relation to the value of what you have. And it can be either positive or negative. If you owe more than the value of what you have, then it's negative. If you own more than what you owe, it's positive. Now, one of the things that I'll say about this is that sometimes, and Grace might say something differently on this when she presents, but my general thought on this is that when you do this personal financial statement, depending on the lender that you're going to, as I mentioned, they're going to be looking at things that can potentially be used as collateral. They're going to be looking at cash that can be put into the project. They're going to be looking at how much overall debt you have so that they can look at that in relation to your ability to manage your overall debt. If you do this and your net worth comes back negative. So for, one of the reasons why you see that a lot is if you do not own real estate, but you have student loans or something like that, a lot of times what you'll find is your net worth is negative. That is not necessarily going to disqualify you from getting a loan. It just means that you're going to have to work with the lender and see what's on there that can be assets to you, and what your overall picture looks like. So if it comes back negative on your net worth, that doesn't necessarily disqualify you from getting a loan. The other thing I would say is when you're doing this, there's value in sitting down with somebody like us from SBDC to help you do this, to make sure that you're really doing it correctly, because it can be a little tricky to do sometimes. When you look at capacity, what you're really looking at there is, if you're in business, you're going to look at the business financial history and say, is this a business that pays their bills when they're due? Do they have extra cash flow to be able to pay their bills? If it's and if they can't, can the business owners personally repay the loan if the business fails? And that's why you look at things like the personal financial statement to see what kind of assets and liabilities the business owner has, because the lender's really looking to say, can the business owner personally repay this loan out of their income if the business fails? And, one of the ways you see this is, are there outside sources of income that can support this loan? And what we typically mean by that is, so if you go to get a loan for your business, one of the questions is going to be, do you have either yourself or someone that can guarantee the loan, another job or some other outside source of income that can go towards guaranteeing this loan? It can be you having an outside job, it can be a spouse, it can be a family member, it can be a friend, it can be anybody who has some kind of outside source of income that could potentially go to repay that loan. All of those things are things that can help you. Collateral. These are the things that you can use to secure the loan. These can be things like hard assets, like a house, a car, different things like that. It can be equity. And typically what we mean by equity is things like, and it depends on the lender as to what of these things they will use and what they won't. It's different for different lenders, but you can look at things like retirement accounts, like stocks and bonds, like things like that, as potential security. And then you can look at personal guarantees, like you'll have to do one most likely for yourself. You'll have to sign a guarantee yourself, but you can look at other potential outside guarantors for the loan as well. What I'll say about collateral is, whatever you have, be prepared to offer it as security for the loan. When you get a loan application from Grace or from anybody else, one of the things that's going to be on that loan application is a collateral list, where they're going to want you to put down things that you can put as security for the loan and what the value is and what you owe on them, because they want to see what the potential collateral is. It doesn't mean they're going to take all of it necessarily. It really depends on how much you end up borrowing and a bunch of other factors, but they still want to see what that is. Do not leave that blank on a loan application, because if you do, it's going to get sent back to you and you're going to have to figure out something for that. The other thing I would say is, a lot of times people will say, well, I don't want to put a lien on my house. I don't want to put a lien on my car. I don't want to put a lien on this stuff. And as a lender, what the lender is hearing you say when you say that is, I'm not going to repay this loan and I don't want you to come take my stuff. So you really don't want to be in that position. So just make sure you understand that you're going to have to put up some kind of collateral for the loan, and you need to work with the lender to figure out what that's going to be. These are some examples. I mentioned real estate, vehicles, FF&E, that's furniture, fixtures, and equipment. That's the assets of the business. Okay, so any equipment that you have for the business, any, computers, tables, chairs, that kind of stuff. Some lenders will take inventory, some won't, because the idea is that you want to sell the inventory. So you don't necessarily want to take a lien on that, but there's ways that some lenders can work that out. The all business assets that you will see lenders look at. Most lenders are going to file a lien on the assets of your business. And what that is, that's called a UCC. And so you might have heard of something called a UCC1. What that is something that a lender is going to file with the Secretary of State with South Carolina, that's going to put a lien on the personal assets of your business, so that if you don't repay the loan, the lender can then come collect on that equipment, inventory, whatever assets your business has to repay that loan. Personal guarantee, I mentioned that you're going to have to sign one personally. You can get others to sign them. Some people get guarantees from outside businesses. That'll work sometimes too. If you know someone that has a business that's willing to sign a guarantee, that would be something that would be an option as well. When you look at capital, that's how much personal investment. We've talked about that already. Minimum 10 to 20%. As I said, some lenders are going to go higher. They're going to want to go as high as 30. As I mentioned with Climb Fund and other types of lenders, a lot of times they can look at prior investment, both personally and in terms of the business. So in other words, when you're first getting started, you're using your own capital more than likely to get this business up off the ground. And so they can look at, how much have you put in? And so remember, I said it's important to track that, to track the value of what you're investing in your own business. The other thing that's going to happen is, you are most likely going to be reinvesting the capital you get that you earn from the business into the business itself, and you're going to want to track that as well. So make sure, remember I said a little bit earlier that you want to set up a separate business bank account right away so that you can track all the money that's going in and out of your business. The other thing you're going to want to do is to track your business finances in some way, whether it's QuickBooks, whether it's just an Excel sheet, whether it's some other program you pull out there. Make sure you're tracking your business financials. Either do it yourself or get yourself a bookkeeper or an accountant to do it for you, so that you know what's being put into your business. Oh, and that's what I was going to say, because you can see that from the business financial history, and I'll show you what some of those forms look like. Conditions is another factor that lenders are going to look at. What is the industry you're going into? What are the products or services you're selling? And is there a demand for it? Is there a need for it? If you come and you say, well, I'm going to open a coffee shop, well, that's great. I'm going to open it right across the street from a Starbucks. Well, that's probably a problem. You might want to look for a different location. So there's different things in terms of what you're selling, product or service, and the industry that you're in, what the market trends are, what the location is, and things like that are going to be important. Seasonality is a factor that you're going to see in your finances, and we'll talk about this a little bit when we look at an example of what some business financials look like. And what that means is that most businesses are going to have some fluctuation or variation during the year as to when they're going to do really well and when they're not. A classic example is, if you're selling ice cream, then you're probably going to do better in June, July, and August than you are in December, January, and February. Those are the kind of things. But every business is going to have that some of that cyclical trend in it. You're going to want to try to figure out what that is. And so sometimes it can take a little while to figure it out. But the reason you want to know that is because you want to make sure that you have enough cash coming through your business throughout the year to be able to make it through those times when you're a little bit slower. One of the most, I mentioned location. You want to make sure that your location is good for what you're going to do. Is there a market for what you're selling in that nearby in that location that'll come to your business? You don't want to be too near a competitor. You want to know about your competition. How successful are they? Where are they? What makes them successful? What's different from you? What makes you different that will give you an edge in that market? I'll mention owning versus renting. That's a question we get pretty commonly. Should I own versus renting? And I hesitate to make too blanket a statement on this because every situation is a little different. But in general, I will, because most of the time, the majority of the time, it's going to make more sense for you to rent early on in the life of your business, especially, than it is for you to own, because you want to make sure that the location is right. You want to make sure that the business is successful the way you put it together before you go too far in as far as getting a real estate mortgage or anything like that. But there can be circumstances where it makes sense to own, but that's something that we can talk through as part of your business planning process. Sources and uses of funds. This is something you'll get this form from the lender. They'll want you to fill it out. Again, we can help you with this. This is really just breaking down how much do I need, how am I going to use it, and how much do I have to put in, and how much am I asking for. And what you want to be able to show, make sure that you're able to show on there, is that what you're asking for is reasonable, that it's enough to get your business going successfully, but that it's not more than you can repay. And also you want to show what you're putting in there versus what you're asking the lender for. Part of your loan package, part of your loan application is going to be projections. So this is going to be, if you're just starting up and you've never been in business, the projections are important because we want to see how this is going to perform over the next typically 3 years to show that, number one, the business can grow and be profitable, and number two, that you will have the ability to repay the loan. Typically, the projections are going to be monthly the first year, and I'll show you what they look like. This is an example of a sales projection. And so the first part of this is you're going to go through, and as I said, monthly the first year. And I'm just going to give you a real quick high-level overview of this because I know that this can be a little bit overwhelming and scary. And so really, this is one of the things where I recommend that you come and work with us, and we can walk through this with you and help you understand what this looks like. Because, one of the most common questions I get is, well, how am I supposed to know how my business is going to perform? And we can help you figure that out. So you're going to look at how many things are you going to sell and what do you charge for each one of those things. And that's how much your sales is going to be. That's how much money you're going to bring in. So that's your revenue. How much of each of those things are you going to sell? What's your revenue going to be? And then what does it cost you to sell each one of those things? As a service, if you're a service business, if you're a cleaning business or you're something like that, then this is going to be a little bit different. You're not necessarily going to have direct cost of sales. If you're a restaurant or something like that, though, you will, right? You've got to buy the food to then prepare it to sell to your customers. So you're going to have cost of sales. So you're going to determine what those are. You subtract that out from your revenue, and then that gives you your gross profit. That's how much money you have to work with to pay your other expenses. So what are your other expenses? Those are things like your salary, your utilities, your marketing, your rent, all those kinds of things that you're going to have to pay. So then you subtract those out, and that gives you your net profit. Now, here's the reason why it's so important to do this monthly for the first year. Look at what's happening with this business. So they start out the first month, they've got about $2,300 left over, then it goes down a little more, then a little more, and by April, it's negative. For a lender early on in your business, this is okay to see this. What this is telling us is we need to make sure that you have enough capital, that you are borrowing enough money for working capital to make sure to cover that loss. What this is telling us is, so what are your monthly expenses? Your monthly expenses here for this business are, about $5,000, right? Typically, what we're going to recommend is that you have 3 to 6 months worth of that expense on hand in working capital starting out. So typically we'll say 3 months at least. So that's going to be at least $15,000 in working capital that you're going to want to have as part of your loan package to make sure that you can cover that shortfall until the business really starts to turn a profit. Now, That's looking at your profit and loss. That's just looking at what you can expect to have in sales and what you have in expenses. And so how much you're going to need each month to operate that. The other side of this coin is the cash flow, because one of the things about this is when you look back at this, what your sales are, okay, this is just saying when those sales come in, this is what you're going to get, or when you make those sales, but you still have to go out and collect that money. And so guess what happens? So you sell something the first month and they're going to say, well, okay, I'll pay you in 30 days for that, or I'll pay you in 60 days, or I'll pay you in 90 days. And then you have to go out and collect that money. So there's two different things you have to be aware of here. Number one is, how are my sales? Am I making enough sales to make enough money to make this business profitable? That's the first part. But the second part, and really in my mind, the more important part, is when am I actually getting paid for that stuff? And is the money coming in when I need it to be able to pay those bills? Because if all of your bills for your business are due in January, but all of your sales come in April, you're going to have a problem, because you're going to have a shortfall there on being able to pay your bills. And that's why, and we hear this all the time, I'll come in and business owners will say, I made $50,000 in sales and my bank account is negative. Why is that? Well, because you've made $50,000 in sales, but none of that money has come in. So you've just been paying out and you haven't collected any of that money yet. And so that's where we need to also look at your cash flow to make sure that your money is coming in when you need it to show that you can keep the business operating smoothly. And as I said, this is just a real high overview of what these things are. When you actually sit down to get ready to do this, if you come in and work with us, go through this with you line by line and help you understand how it works. So basically what your cash flow is telling you is it's taking into account the cash that you have on hand, how it's coming in and how it's going out. So that's a real high level overview of kinds of things that you're going to need to have for a loan package. And there's one more slide I meant to put in here. So, and I dropped it out accidentally. So let me go back and I want to go through one more thing real quick. Here we go. What you need for a loan application. So I talked about the business plan, talked about the projections, the financial statement, credit history. You're going to want to have a resume that you can put together. You're going to want to have 3 years of business tax returns. If you have any, 3 years of personal tax returns, and then any business tax returns you have, you're going to want those as well. If you've been in business, you're going to want to be able to show profit and loss, balance sheet, and cash flow for your business. 3 years or however many years you've been in business. So this where it's really important, because you're going to want to make sure you can generate these documents, okay? And you might be looking at that and saying, how do I do that? Well, a lot of businesses use QuickBooks. You don't have to. There's other programs that are out there. You can use an Excel sheet. There's other ways to do that. But this is where we really recommend, I think it's a good investment, that you work with a bookkeeper and an accountant, or an accountant, and we can help you determine which is best for you from the very beginning of your business, to help you make sure that you're tracking all these things and that you're able to generate them, because you're going to need them for any kind of financing application you're going to do. Even if you go to get a grant, they're still going to want to see this kind of stuff in a lot of cases, because even though you're not going to have to repay the funds, they're going to want to see whether or not you've got a growing, potentially successful business that they can invest in. You're going to want to keep bank statements for your business bank account so you can show what's coming and going. If you have any other financing on your business, any other loans, you're going to want to be able to document those. You're going to want to have a list of what you can use as collateral. Business organizational documents. Number one, make sure that you have some kind of business organization. A lot of businesses do LLCs. Some do sole proprietorships where all you need is a business license. But either way, make sure that you have legally structured your business and that you have the documentation to show that, because your lender is going to want to see that. And then please, 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 I hear this all the time. I just heard it last week. Make sure you get insurance on your business, because Number one, it's dangerous if you don't have it. And number two, you're going to be required to have it for a loan package, because if somebody comes in your business and they fall and they sue you and you don't have any insurance, then you're personally liable for that. So those are the kinds of things you're typically going to see on a loan application checklist. We can help you figure out how to pull all of those things together. So thank you. I know I've been talking a lot. I've thrown a lot of information at you. So I will turn it over to Grace, but first I will stop and see if we have any questions from this part of the presentation.
Paul, there was a question earlier about whether or not there was a short business plan model.
Yes, there are a few different things that we have available at SBDC that are kind of shorter things that will help you. A lot of times, and we can walk you through that. There's something called Lean Canvas that's a good shorter version. Sometimes it's going to depend on the lender and how much detail they want on what you're trying to do. But certainly we have some of those that we can help you through. But also, and I want to say this in relation to that too. Don't think of your business plan as just something that you're doing for the lender, because it really isn't. It's really something that you are doing for yourself to help you, because I will guarantee you 99.9% of the time, if you just start your business with no planning or no any of that, at some point you're going to run into trouble and you're going to come to us, or you're going to come to Grace, or you're going to come to somebody and you're going to say, I don't know what's happening. I don't have enough sales. I'm not making enough money. Those are the kinds of things that a business plan can help you figure out. And it's also one of those things. So not only is it really important for you to do it, it's really important for you to revisit it from time to time so that you can see, I mean, if you're completely off base from where you thought you were going to be, good, bad, or otherwise, that can be a good thing, but it can help you understand how you need to plan and adapt your business. I can put my information in. And I'm going to stay on here. So after Grace done with her part of the presentation, I'd be happy to answer questions at that point as well, if nobody has anything else now. So I will turn it over to Grace, who is okay. Will a profit and loss statement from a tax return, will that suffice to submit for loan documents? I'll let Grace answer that question, but a lot of times it can, just depending on the particular circumstance and what you're looking to do. So Grace, I will turn it over to you from the Climb Fund. She is a business development officer and loan officer with the Climb Fund. Great organization, if I do say so myself. I'm a little biased, but they are a great partner for us. We send a lot of folks to them for potential lending opportunities, and a lot of times they'll send you to us for help with business plans and that kind of thing. So we're great partners with each other. We work well together. They can be a great lending option for you. And I will turn it over to her.
Thank you, Paul. Good morning or good afternoon now, everyone. Thank you guys for joining us. Just a little background on myself. My name is Grace Butler. I'm a lead community development loan officer here at the Climb Fund. I come from a banking background, and as of the last 2 years, I've been strictly in small business lending through a CDFI, which Paul touched on a little bit on what a CDFI is. So just to give you a little background information on the Climb Fund, we are mission-driven lenders, which means that we are mission to create access to capital for small businesses. And we do some affordable housing developments as well for those businesses that are unable to secure your traditional financing, like through your normal financial institutions, like your local bank. And with that mission, so our goal is to improve the economic opportunities available, as well as supporting economic justice and creating jobs in these communities that we're able to service. We service all of South Carolina, and we are a 501c3 nonprofit organization, as well as a state and federally certified community development financial institution. And throughout these slides, One of my favorite things about this is we get to show some of the businesses that we've helped previously throughout South Carolina, throughout the state. So you may see some businesses that you're familiar with. So just to show some history of the Climb Fund itself, we began in 1979 as the Charleston Citywide Local Development Corporation, or Charleston LDC. And not long ago, but in July of 2021, is when we became Climb Fund, because at that time we were able to expand our footprint. We mostly previously only did low country businesses, but now we're able to service all of South Carolina. Just some additional facts, as at the end of fiscal year 2021, we had made over 680 loans over the last 42 years, which turns into over $41 million lent, over 5,500 jobs created, 383 units of affordable housing created, and we've had a 95% success rate on borrowers being able to repay their loans. So with that expansion into all of South Carolina, we have also grown in the amount of dollars lent as well as the amount of loans made. During the year of 2021, 15% of all the dollars lent throughout the existence of the organization, and 11% of all the loans made in our history were done in the year of 2021. So we have absolutely definitely been growing, been able to reach other markets and service additional industries within these last 2 years. Just to add a little more detail to that expanding geography, like I said previously, we were more so focused on the low country, but now over the past 2 years, over 30% of our loans have been made outside of the Charleston area. A little background on some of our borrowers as far as the industries that we have been able to service. It shows you that a large percentage of our lending has been made to minority-owned businesses. The South Carolina minority business ownership rate is right at 17%. And in 2021, a little over 50% of our loans funded were to minority-owned businesses. We're also growing in our industries. We're pretty heavy on the food and bev side. One number that has changed over this last year, in 2022, we've seen a great increase in transportation loans and trucking loans as well. So the way we're able to fund these loans and provide these loan funds are through our sources. So we do have traditional financial institutions that fund different loan programs to be able to meet a CRA Act or the Community Reinvestment Act, local financial institutions, some of those being Wells Fargo, Synovus, First Citizens, and South State. And then we do have some private investors and foundations that we also partner with, as well as our government partners through the SBA, the USDA, the CDFI fund, and different local municipalities like the city of Charleston and Goose Creek. So how we lend, there's just a few background details. Our average loan size is usually about $70,000, but there is no minimum or maximum loan amount. Our interest rates, we have different programs. Like I mentioned, we have different funding sources, and each funding source has different requirements that you can meet to qualify for certain programs. So we have some funds that can have interest rates as low as 2%, but we usually go up and max out at 11% on the interest rate. And there is a $125 application fee. Now a big part of what helps us be able to service so many businesses and help so many different loans is through our referrals, through banks and credit unions, Small Business Development Center. Paul is a great partner and resource with us here. Women's Business Center, the Chamber of Commerce, other business support services like SCORE, and then other business owners who have been able to come in contact with us at the Climb Fund and spread the word to other business owners that we do have funding available, and we are available to lend to startup and existing businesses. Now, one of the first things we do have to have before starting the application is the proof of a declination of credit. As we stated before, our mission is to serve those who are unable to receive traditional financing. So that means if you're unable to go to a traditional bank, receive funding, and it always doesn't mean that you have to actually go through an application process. A lot of banks don't fund startup businesses. So if you have a reference that you spoke with at the bank, just providing their information or possibly some type of communication from them saying that they were unable to fund your business application or funding application, that would suffice. And it's not just for loans, it could be an application that was declined for a line of credit or a credit card, or if it was just by verbal declination of being unable to service your business, and that would suffice as well. Another huge part of our application process is your business plan. We are essentially business plan lenders, which means we count on the business plan to really be able to understand what your business is, who you're servicing, how you're servicing your business, the plan as far as the makeup of the business owners and individuals that would be involved in the business's operations, as well as projections, and tells the story of what really it is that your business will be doing. And we do rely on our referral partners like Paul at the Small Business Development Center that will assist you with that. He went extensively and gave a lot of great information today on exactly what it is that we're looking for in those business plans. Specifically to the Climb Fund, we do have a checklist that you will also receive with your application that has a list of items that would need to be submitted. A lot of those items you saw on the previous screen before Paul finished about a lot of the things that we require. But specifically the business plan, in that checklist, it has specifically what we're looking for. Because a lot of times business plans can be very extensive. It could be a lot of information. So we try to fine tune that on the application so the exact information that we're looking for, you're able to see that and can create your business plan based off that for your application here. The application can be found on our website. It's at www.climbfund.org/apply. There are a lot of resources there. If you go to the apply tab, or if you enter the email address there as it's listed, it kind of takes you through all the steps. So before you actually apply, we have a lot of information and resources and templates there for some of those checklist items. We also have what's called an application workshop. It's a YouTube video about 45 minutes long. And it takes you through our application extensively. It goes through every page of the application, explains how the application should be filled out, what we're looking for in each section, as well as it goes through each disclosure that you'd be signing in that application packet. And then to kind of mention from some of the things Paul discussed, collateral. We do require collateral on our loans. So those are items. So that personal financial statement is one of those checklist items. And we do look at the personal financial statement as well as the collateral section of your application to see what is available and what would be the best sources of collateral items to pledge to secure your loan. But it changes on a case-by-case basis. We'd like to see ideally about a 1-to-1 ratio as far as collateral is concerned, meaning for every dollar of loan funds that you're looking to receive, there's an equal amount of collateral value or equity value in collateral to secure the loan. It's not a deal breaker or doesn't disqualify you if you don't have that, but it is our goal to see that in that process. And then also, as he mentioned on the personal financial statement, a negative net worth does not disqualify you from the process, but it lets us know where you are, where we stand, and hopefully by generating this income and creating this business for you, eventually that negative income could possibly turn into a positive net worth, excuse me. So as Paul mentioned, our considerations, we do look at the 5 C's of credit, which are the character, capacity, collateral, conditions, and then the credit. But it's more than just a number for us. As I said before, we're not like a traditional financial institution. And one of the things that I love most about this organization is our ability to be flexible. So we don't just look at the numbers, we actually look at the actual story and the business owner and really take a subjective look at things to make a lending decision. And it's all done on a case-by-case basis. So no process is the same. We try to remain as flexible as possible to be able to say, this is where we are today. You know, yes, we can help you, or how we can get you to funding and approval of your application. If it's ever a not right now, it'll be more so of let's make a plan on how we can get you approval ready. So it's a not yet, more of a no in most instances. But like we said, it is on a case-by-case basis. And then after the loan application process, if the loan is approved, it's not where we just fund you and lose contact, but we stay in contact with our clients by providing technical assistance. Climb Fund provides over 2,500 hours of technical assistance yearly, annually, by business coaching to our borrowers through different resources. We do have a full-time director of client success on staff. His name is Charlie O'Brien. And we also have a network of contracted specialists and consultants that help all of our clients, and this is free of charge. So for any needs that arise, whether it be for assistance with your bookkeeping or your accounting, social media assistance, we have industry-specific experts. We have two food and bev consultants, as well as a transportation consultant as well. We have a plethora of referrals for you in the sense of legal or real estate, or if you're needing HR assistance or IT assistance, and just small business generalists. And then we also have all of our borrowers. We have an extensive group of borrowers that are current and former borrowers who network with other Climb Fund borrowers. So it really almost is like joining a family, in the sense of we've had certain restaurants reach out to a borrower that is in HVAC for repairs. And so we really are able to network and create a community for you to be a part of, to work with as you're growing your business, whether it be for just general support or assistance or advice or anything along those lines. We're able to provide that as best as we can. So this is in a nutshell a little bit about us here at the Climb Fund. If you're feeling as though you're in a place where you're ready to apply for funding, you've worked with Paul and the SBDC, you've gathered all the necessary documents, and you're in a place where you're ready to apply for funding to start your business, or to apply for funding for expanding your existing business, definitely reach out to us. My contact information is listed here, my email address and direct office line. We're located downtown at 2 Race Street. It's at the corner of King Street and Race Street. And I believe we will now open up for questions.
Thank you, Grace. I really appreciate it. Yeah, if anyone has any questions, you can use the chat box, and we would be happy to answer them. And I think, one of the things that you talked about that I also really loved about the Climb Fund, that I think is cool about, working with us, is the technical assistance piece of things, and you've got some very specialized technical assistance you can offer certain kinds of businesses after they become borrowers. And that's really, for us, that's really our focus. And we look at this as a relationship with our clients, to where, we might start working with you when you come to us because you need financing or something else. But we really envision that as establishing a relationship where we'll continue to work with you over time, so that as you have future needs, whether it's marketing, whether it's HR, whether it's expansion, whatever those needs are, that we can walk with you through that period as well.
And we will be sending out this information via email after this presentation. So you'll be able to see this recording and get some of this information if you didn't catch it all, because I know that they gave you a lot of very useful information.
Other questions?
All right, I don't see anything in the chat box. We have several thank yous. Thank you, Grace, so much for participating on this. And Paul, thank you for providing all of your great resources. We do have a question. And this looks like it's to Grace. Do you fund car rental businesses and short-term corporate rental business?
Yes, we there's actually some that are currently in our pipeline now. So we do are able to fund those, but it still goes through the normal process of the underwriting and seeing the business plan. The business plan, I will say, for those types of business need to be very detailed. We really need to understand how you plan to operate the business and generate the income. Any specific permits or things of that nature that are needed for that type of industry would definitely need to be included. But yes, we do consider short-term corporate rental businesses.
We have a couple
car
more.
rental business, I would have to get back with you specifically on that. But short-term corporate rentals, yes, we do. We are considering those for funding.
Okay, great. And we have a couple more questions that I'm going to read out loud. One is, how do you establish business credit? And that is to either Paul or to Grace.
Okay. So there's an organization called Dun & Bradstreet. I think they might have changed their name recently, but it used to be called that, and I can share their information with you. But you can set up an account with them. It'll cost you a little bit of money, but it really is worthwhile. And what that can do is that can help you establish business credit. Because, and the reason that's important, like we said, is because otherwise, if you have an established business credit, your personal credit is your business credit. And at some point, you're going to get to where you're going to say, well, I'm tired of getting my own credit pulled all the time, and having all this stuff show on my personal credit report, and that's where the business credit can really come in to help you. Now, what the business credit does is it tracks things like when you have vendors, when you have people that you buy stuff from, do you pay them on time? So the other thing I'll say about it is, just like with your personal credit, if you're going to establish business credit, make sure you pay your bills, because otherwise you're going to have the same sorts of issues with your business credit that you do with your personal credit. But it can really be a valuable tool, because otherwise you're doing all this, paying vendors and doing all this, and you're not really getting anything for it, because none of that stuff is reporting to your personal credit. So you need to make sure that it's reporting to your business credit instead. Unless, this is maybe kind of getting into the weeds, but I'll throw this out here anyway. Sometimes when you go to sign a lease for a space, or you sign up for terms with a vendor or something like that. Most commonly, I've seen it when you go to sign a lease, but I've seen it in a few other business instances as well. They might ask you to personally guarantee it, just like you would personally guarantee a loan. And in that case, what that means is the same thing, which is, especially with the lease, if the business fails, you're still on the hook for that lease to repay that personally. So just something to keep in mind.
Okay. And we have another question. And this one is, how long is the funding process from start to finish?
Is it depends a good answer? Grace, I'll let you take that one.
It's probably true.
That is a great start to the answer. Absolutely. It depends. However, on average, we're seeing about a 30 to 45 day turnaround here at the Crime Fund. And that timeline starts once a complete application packet has been submitted. So that means you submitted the application, you paid the application fee, and all the documents on the checklist have been submitted. And once that happens, then that time starts. And we do have a pre-loan specialist here at the Crime Fund who will work with you. Her name is Caitlin Beard. she will work with you with getting all of those documentation together. So if you come in and you have some things that you already have ready, you'd like to go ahead and send it in, you can do that and your file can be created, and she'll work with you as you get the additional documents. And she'll have, once everything is received, she'll let you know, hey, everything has been received, you're being assigned to a loan officer. And then that's when that 30 to 45-day timeline starts from application submission to funding on average. However, it does depend.
Okay.
It's on
Our
case by
next-
case basis.
Absolutely. Our next question is, how long does the business have to be established before applying for funding?
So for us here at the Climb Fund, we fund startup businesses. So if you haven't opened your business yet, you're able to apply for funding. That's one of those instances where you probably won't actually have to go through an application process with the bank, because verbally banks will let you know ahead of time, we're unable to fund startup businesses. And so then at that point, that's your declination and you're able to apply with us for startup funding.
Yeah, and I'll just add to that. I mean, it depends on the lender. I mean, from certainly with things like Climb Fund, they'll, start up all the way through. Banks, it's going to be typically 2 to 3 years. And I will say, since it's, are we recording this? No, I'm kidding.
Yes.
Since it's just us on here, there are some banks out there that tell you that they fund startups, but they generally do not. So you really do want to shift more to organizations like Climb Fund, and we can help you determine who the best lending resource for you might be, because it really is. I mean, for your traditional bank, it is going to be that 2 to 3 years. And so if you haven't hit that point yet, you're going to have to look at alternative lending sources.
Okay. And it looks like we have some specific questions, and I will say, I'll preface this before I read it, that it may be good for some of the specific questions to reach out directly on your own circumstances. And I know Paul I'm going to read them. Paul, I intend to open a machine shop, and the overhead to get started is almost cost prohibitive. In fact, I believe it exceeds all amounts you have spoken about. I have a FICO score of 803 and $30,000 in credit, no revolving balances. My main customer is DoD with much opportunity. However, personal cash is low and there's no 401k. Any experience on this or suggestions or grants that you may know of to help me get started?
Yeah, that might be one where we want to set up something to talk offline. In fact, we have here in our office in Charleston, we have Scott Poole, who's our government contracting specialist. And if you're looking at primarily working with DoD, he might be a good resource for you. But I would recommend reaching out, and we'll set up a time to talk offline about that.
Right. And we'll get, we will send a follow-up email after this, and that would be a great way for us to connect with you, Christopher, directly on that particular question. All right. The next comment, thank you for all the information. I am a SCORE mentor from the Charleston area, and I'm running my own consultancy business. I have a few clients that I work with, and they need some financial assistance for startup. Who can I approach? They can reach out to us directly, Paul. You can follow up on that, but that's what my advice would be, to go on our website, scsbdc.com, and have them register, and a consultant can help with that.
Yeah.
Do you have any follow-up on that one?
No, that's absolutely right. Yeah. And again, if you would like to reach out to me directly, I'd be happy to set up a time just to talk with you a little bit offline, just to see how we might be able to work together. Great.
And then there is a question about if we are able to assist businesses that own multiple businesses and fund multiple businesses. And I would say for the SBDC, that would be a yes.
Yeah. I mean, yeah.
Yep. And then Grace, I'm sure that the Climb Fund helps the business owners with multiple businesses.
Yes, I would just recommend that it is as organized and as possible, in the sense of knowing exactly how the businesses would work together, the setup of the business as far as your business documentation, how the entities would work together, all of those things. And it can be detailed in your business plan, basically how each moving part would work. And also, but if you'd like to talk more specifically about which businesses and how they operate, I failed to mention this earlier, but through our website, you can also schedule a one-on-one with the loan officer. It'll give you about 30 minutes of time with one of our loan officers. There's 4 of us total, 2 here in Charleston, 1 in Columbia, 1 in Myrtle Beach. But we'd be able to answer any questions specifically to exactly how you're looking to create or organize your business and apply for funding.
Okay.
And if you haven't started all of those multiple businesses, that's something that we can help you figure out, because it's from a business perspective, it's a lot easier to scale up than it is to scale back. So one of the things that you want to be careful of is, you don't want to do too much too quickly. So we can help you from a planning perspective to kind of figure out how the pieces should fit together. And maybe, because I've had people that I've sat down and talked to that wanted to start 5 radically different businesses all at the same time. And so then we started to say, well, let's talk about maybe 1 or 2 and getting those profitable, and then we'll so we can kind of talk through strategically on some of those things what makes the most sense.
All right. Well, we have hit 12:32. So I don't want to take up too much of everyone's time. I know that there is a lot going on, and I appreciate all of the time from you, Grace, and from you, Paul. Thank you so much. And if anyone has any questions, feel free to reach out to us. We will send a follow-up email with contact information and this recording. So I hope that everyone has a wonderful day, and we look forward to working with you. All right. Have a good one.
Thank you.